traders from across the globe, and welcome to the 1568th edition of Short-Term Trading Live with Oscar Carboni. I will teach you the art of technical analysis, and I kid you not, traders, I am pretty damn good at what I do. If you would like to learn this, watch the videos, watch all the videos, watch this video, get ready for what's coming next. So, this 1568th installment of these nightly videos are coming to you, or almost nightly I should say, is coming to you on a Monday night for trading, Tuesday, Jan 24th, 2017. Before we get into the topics on the board, futures trading, you must know this, is extremely risky, causes substantial financial loss, is certainly not suitable for all traders. You can lose way more than you think in this game if you don't know what you're doing. In fact, you can probably lose more money than you have in the bank, and that is obviously not going to go over well with the spouse. So if you don't know this game, stay out. If you do know this game, make sure you put your protective orders in and follow me on what's coming next. Traders, from what I can see, we've got a green Omni in gold, baby, and I love to clap for the green Omnis, right? Omni, Oscar's Market Navigational Indicator says gold goes up on Tuesday. Let me read you what's on the board. First topic, the Dow Jones average, the NASDAQ, the ES, the Russell, they are in a holding pattern right now. We're not selling, but we're not going to buy unless we get a deep dip, and I will show you why. Omni is saying maybe you should get short. The formations are saying maybe you should get long. Some of the charts are in bear flags. Other ones are in bull flags, all inside the indices. That's a holding pattern. We've got other trees to shake here. You know what I mean? Let's go shake another one of those money trees and see what happens. So where do we go? Traders, is gold and the US dollar index about to engage my OTAPMA, the Omni Trading Academy's proprietary moving average? Very interesting. Wait till I show you the charts. I'm excited. I've got to show them to you. I'm going to show them in just a moment. If you like the charts that you are about to see in this video, if you've looked at any of the other 1,567 other videos, if you like the analysis that I am teaching, join me in my live free trading room. It's at www.livewithoscar.com. Join me in my free trading room. No credit card required, no information. Give us a username, give us an email address, come hang out with us during the day. This is a community of traders that we hang out all day long and get through the rough and tumble markets with me at the helm, and I've got 35 plus years experience at this. It's free. Come join me. I can use the company during the day. LiveWithOscar.com. With no further ado, let's go look at some charts. Okay, traders, the first chart I will show you this evening is the Dow Jones Transportation Daily Average, deemed the leader of U.S. indices. Now, it doesn't lead every single day of its life, but it is deemed the leader in most cases of U.S. indices. What does that tell us? Well, we had a fantastic chart. It held the 50-bar moving average, and it rallied, and boom, it held the 50-bar moving average, and it rallied, and went into Oscarism F flag. Beautiful. Went up, came back down abruptly, and now we have what's called a bear flag. Bear flags usually create a bearish or downward event. Will we come down to the 50-bar moving average? Well, it looks like that should be a cinch. Will it continue to drop? Well, if it were just a bear flag, I'd have to bet yes. I'd have to come up with a projection off that flag and expect it to drop, and I would give you the projection, right? That would make us sellers of the stock market. Here's why we're in a holding pattern. This is your transportation average, and a bear flag points down, right? Well, here's the S&P in a very nice, well-established bull flag. So, all right, bear flag in one, bull flag in the other. That tells me it's starting to get neutral. What's next? NASDAQ, you're in a wonderful F flag inside of a fantastic channel above the channel center line. You know, I'm not selling that. I'm sorry, we are not selling this. And then, of course, you've got the gold traders. So we're going to stay away from trading the indices unless we buy dips. But here's the story, if you ask me. Look at gold, the daily chart. Is this a V bottom forming? I mean, what letter does that look like to you?
That looks like a V to me.
Looks like a V to me too. I kind of like that, right? So I think that's a V. It doesn't have to mean anything, but general analysis will tell us that a V bottom usually correlates to a higher market to come. So that's the first look at gold, and you would think, fantastic V bottom, let's buy it, let's go gangbusters, we're in, sell the farm and buy gold, right? That's what you get when you first look. Well, let's just keep our eye on this bad boy. Before we sell the farm, hang on a moment. Once again, another great looking chart. We had the V bottom, this is the right side of the V with a little bit of analysis thrown in. The V is really the right side of the V. Now, if you can't figure out what I just did, I only blew up one side of the channel. This was the V, right? We had this V bottom. I wanted to show you this side. It's a bull channel. It made a bull flag. You've seen this when it created itself. I put it in a video. Then when the bull flag was created, I put that in a video. Then when we got above the 50-bar moving average, I put that in the video. Then when we got below this channel, I said, okay, let's not sell for a day. Let's see what happens. Let's not do anything. Let's not buy. Let's not sell. Then we got about here, and we had a little bit of a sell day, and then the Omni immediately went back into a buy signal. And now look, on Monday, we ended up back inside the channel. So Omni has been working with gold really well. So the first look I gave you in gold, bullish. The second look I'm giving you in gold is also bullish. We're back in the channel. We're above the 50-bar moving average. It looks great. But then there is OTAPMA, and that's why I was wondering, is the gold and dollar index about to engage my Omni Trading Academy's proprietary? Here's why. This is gold. Let's put the brakes on the gold going gangbusters higher just for a moment. You'll note that for whatever reason, the OTAPMA tends to have a great influence on the gold market. What would make me say that? Look at the hold here. Look at the hold here and here and here. Then you break it. Look what happens when you get back to it. A rally up, a spike above it, and a breakdown. Now we're heading back towards it again. We do know this. Trouble does come when we get near the average. Will we this time get above it, complete the V bottom, and explode? I think it's got a good shot at doing that, but that would only mean the dollar has to continue going lower. So you've had three views of the gold. Let's go look at the dollar now. The dollar index, once again engaging my OTAPMA, or the Omni Trading Academy's proprietary moving average. It's not quite engaged it yet. You need another down day at least on the daily chart in the US dollar to engage my OTAPMA. But last time it engaged it, it spiked right back up. We are about to engage it again. For gold to continue to go higher, dollar has to break OTAPMA on the downside, and gold will have to break OTAPMA on the upside for gold to continue higher as far as my analysis is concerned. So a very, very interesting place we are at right now in the dollar index and in the gold. And I tell you what, traders, my eyes are peeled. I am staying tuned because I love what I see. And look, one more view at the dollar index. Look at this chart. This is my chart masterpiece for this video, and long-term dollar index, weekly bar chart. You'll note once again the Omni Trading Academy's proprietary moving average, or OTAPMA, is all over this chart. But look at the fantastic hold here, 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 and here. Then it does get under, and it stays under, stays under, stays under, stays on. Gets back above right here. And at about 81, it gets above OTAPMA, and look at the explosion. It rallies all the way to 100. It rallies 19 full dollars or points in the US dollar. And we put in some kind of a crazy flag. We get back to the OTAPMA. It messes with it, messes with it, messes with it. Finally, what we like to call a hold. And it takes off for $8. So it took off for $19. Then it exploded for $8 from holding OTAPMA to here. So what should happen next? We likely should come back and test OTAPMA somewhere down here. That pushes the dollar a bit lower. that pushes the gold a bit higher, and the whole thing makes sense to me because nothing is really getting out of control here. So I like this view. I like the view that we have. I like the green Omni for gold for trading on Tuesday, and I will see you all at livewithoscar.com. Okay, traders, you've seen the chart. You've got my technical argument for why we've got the green Omni in gold, why we are in a holding pattern or possible buyer of big dips in the NASDAQ and emini S&P, and why the dollar index and gold look to be engaging OTAPMA, and that kind of makes sense for both of them. Traders will be buying dips in gold, at least for trading on Tuesday, and holding off on doing anything in the indices unless they show us that they want to hold in the bottoms of those bull flags. Right now, in the center of the flags, nothing for us to do but go neutral. Traders, there's a lot for us to do in the rest of the markets. There's a lot for us to do all day long tomorrow in the trading room. Join me live in my free trading room. Remember, no credit cards required. Just come hang out with me and we'll get through these rough and tumble days. So, one of the things I noticed on television today, which really caught my attention and I think deserves a real round of applause. Sean Spicer. Oh my God, did everyone check out that press conference today? Donald Trump's press secretary, Sean Spicer. Oh my goodness, is that guy not perfect for the job? Welcome to the position. Thank you so much for handling those reporters. You were courteous. You were absolutely thorough. You let everybody get their questions in, and you didn't take anyone's BS. Well done. That's exactly the way Donald Trump's been handling the press since he started running. Now that he's the president, I hope he continues to manhandle the press. You do the same, Sean. Answer their questions. Don't let them bully you around. Fantastic job. Loved it, loved it, loved it. All right. Enough of that. Traders, what you've seen on the board is what we're going to deal with tomorrow at livewithoscar.com. Make sure you see me there. Always keep your emotions out of trading. One of the best things you can do, in my opinion, to help keep those emotions at bay, and I know that isn't easy. I've been doing this for most of my adult life, all of my adult life. But if you do this correctly and you make your risks calculated by putting your stop orders in. A stop is absolutely your best friend. There are some rumors that stops won't always work. I am here to tell you, electronic markets started feverishly in 2005, 6, 7. I have never seen anyone's electronic stop get blown through by more than just a little. My personal experience since 2007, 6, when this all got heated up. So I am telling you, put your stops in. Don't let anyone tell you any different. Put your stops in. Put them in first. It makes this a calculated risk. You know how much you're willing to risk when you put the trade on. And then say this to yourselves every morning, every afternoon, every evening. And you know what that is. Stops are in. Emotions are out. Rock and roll live with Oscar.com. I will see you there in my free live trading room. Futures trading is risky and can cause substantial financial loss. We do not claim or guarantee that you will profit from the information provided.